Welcome to a new section of the Smart Money Concepts course. So far, we've learned what market structure is, how to identify highs and lows, and how to recognize bullish and bearish trends. In this part, we will focus on three key concepts: change of character, break of structure, and fair value gap. Let's start with change of character and break of structure. These tools help us understand when the market is changing direction and when it is simply continuing its current move. Understanding their difference is crucial for knowing whether the market is preparing a reversal or just maintaining its trend. Imagine the market is in an uptrend, forming higher highs and higher lows. Suddenly, a candle breaks the previous low, either with its close below that low or even just its shadow. At that moment, we call it a change of character. This shows the market has changed its behavior for the first time. Until now, every time a low was formed, the market went higher and formed a new break of structure. But now the low is broken. That's the first sign of a potential reversal. On a chart, the market keeps making higher highs and higher lows. Then one candle breaks the most recent low, even by a single point. Buyers are weakening and sellers are stepping in. Change of character comes in two types: strong and weak. In an uptrend, there are strong lows and weak lows. A strong low has created a break of structure, with a candle close beyond the previous high. A weak low has not. If a change of character occurs on a strong low, it is called a strong change of character. If it occurs on a weak low, it's a weak change of character. Now, let's discuss break of structure. This is one of the clearest signs of trend continuation. In an uptrend, a break of structure confirms that the market is continuing in the same direction. For example, the market starts from a low, creates a high, pulls back, and moves upward again. When the previous high is broken with a candle close, we have a break of structure. It shows that the market structure is intact and the bullish trend is active. A common mistake is misunderstanding the break itself. For break of structure, the candle must close beyond the structure. Shadows alone are not enough. Only when the close passes the previous high or low, we can confirm the trend continuation. For change of character, even a shadow break can serve as an early signal, though a close strengthens the confirmation. If you plan to take counter-trend trades, never enter on the first change of character. The first one only signals weakening momentum, not a new trend. You need two consecutive change of characters. The first warns of behavior change. The second confirms a real shift in power. Only then can you look for new structures, valid order blocks, and entry zones. How do change of character and break of structure help us? You will see in upcoming sections on order blocks, trend analysis, and entry types. There, we'll show step by step how these concepts connect to form the foundation of the full strategy. Later, we'll revisit change of character in the order block section for even deeper understanding. Now, let's discuss fair value gap, or FVG. This core concept of smart money concepts helps identify areas where price has become imbalanced and where price often returns to fill the gap. A fair value gap forms when three consecutive candles leave a small price void. The middle candle does not overlap with the first and third, showing rapid market movement without proper balance. For example, candle 1 closes at 1.2000, candle 2 opens and closes much higher, and candle 3 opens above candle 2 and continues upward. The gap between the top of candle 1 and bottom of candle 3 is the fair value gap. In downtrends, the gap forms between the bottom of candle 1 and the top of candle 3. These areas are often revisited by price before the trend continues. Let's look at practical examples. The price touches a key zone, forms change of character, and creates several fair value gaps. Later, price returns to an order block. We enter at the top of the order block and take profit according to your strategy. In another example, price reaches an important zone, creates multiple fair value gaps, and a change of character occurs. When price returns to the order block, we take the trade with a 2-pip stop loss. The take profit is flexible depending on your personal strategy. In the final example, after touching a key zone, a change of character and a fair value gap appear. Price returns to an order block. Enter the trade. Stop loss 2 pips above entry. Take profit as defined by your setup. This shows how change of character, break of structure, and fair value gap work together